Okay, I'm going to just go back to what auto companies are indicating to us. Tractor companies are saying that they've never seen this kind of a resurgent demand. Pawan Munjal has gone on record and has indicated that there is more demand than supply. Maruti is also optimistic that things are looking up. Not everybody in the auto industry is excited, but things definitely are looking up. So are we in for a complete change of mood ahead of the festival season, or this is just the so-called post-lockdown rush, which may simply ebb out towards November or December or after the festival season? Now, the best way to judge the auto demand is to understand from auto ancillary companies that what are the kind of indicators they are getting from the buyers, OEMs in this case. What are the Marutis, Bajaj Autos, Hero MotoCorp and the Mahindras of the world indicating? So let's take that discussion forward with Jayant Davar and Mr. Sunil Bohra of Minda Industries. Gentlemen, good morning to both of you and thank you for joining us. Sunil, specifically, what are the sound bites you are picking up from some of your OEM buyers? Are they ready to commit more? Are they ready to buy more? Are they ready to pay more?
No, definitely. As you rightly mentioned, that we are seeing improvement in demand month on month. We have observed that in September, I'm sure the industry volumes are out and everybody has seen it. Some of the OEMs actually have logged the volumes growth year on year almost up to 30%. And the trend and the momentum continues. And we are currently looking at the volumes in October likely to be even better than September. So definitely there is a momentum there in the industry. Now, how long will it last? As you said, definitely everybody is a bit skeptical. I think everything hinges on the festive season with the Navratra, Durga Puja and Diwali around the corner. There is definitely a stocking happening, which is a normal phenomena. But we all know in last couple of years what happened after the festive season. But this time it actually may be different. I think that's the expectation because given the demand which has sort of lackluster in last 2 years, it has been on a downhill. So there is definitely some sort of a demand which has been accumulated. A lot of buyers who have postponed their demands because of BS6 coming around the corner, transitioning from BS4. So that demand also is expected to come to the market. And the biggest demand factor is not the pent-up aspect. I would say it's primarily the personal mobility-driven demand because people want to play safe. They want to, if they can afford, want to have their own mobility solution. So I think that is the key factor which is driving demand. And the two key indications for that we have seen is even in the last SARS, which happened a few years back, and even this pandemic which happened in China, which was the earlier to come out in this pandemic. We have seen the kind of demands we have seen in China, and that's what I think we are seeing a replica in India also. There's a lot of demand if you talk to your friends, family members, relatives, whosoever even are having a car, to make sure that they sort of travel safe. They are going for a second car, or if they are having a two-wheeler, they are upgrading themselves, or if they are not having anything, they are trying to avoid the shared mobility or public transport. So all in all, I think there are a lot of factors which are playing in favorably towards the sector. And we believe that this momentum actually should continue post the festive season as well.
It's just a coincidence that I happened to speak to a friend of mine who's also into auto ancillary, and he said the following, that look, I'm working on 100% capacity. I've started hiring, but I'm not so sure that what will happen to my business next quarter. Because right now, auto companies are also not sure that what will happen to their demand cycle post the festival season. So what's your sense? I mean, can you confidently say that next 2-3 quarters are strong, or right now we're going to take each day as it comes?
I think it's very difficult to say whether next 2-3 quarters will be strong because, as I said, I think everything is hinging on festive season. And if this festive season goes well, we do believe that this momentum actually should continue.
Jayant, do you want to comment on the same point, Mr. Davar, Jayant Davar, that right now we are definitely experiencing an uptick, but going forward, are you confident that it is back to business, or this is just a breath of fresh air?
Well, you know what? Obviously, all of us want to believe that this is something which is there for a much longer period of time. However, I would say it would be conjecture. But having said that, I think it's also important for us to understand that this is not the first time. Any part of the year, any time of the year, and we've gone through several ups and downs in the last 10 years. Each time we come out of it, there is always a sense of apprehension. So I think there is a sense of apprehension which is well marked. But all indicators, like Sunil said, point to a sustained recovery in whatever we've gone through in the last 2 quarters. In fact, September was pretty much the same as what was in the previous year, a little over that. And October, perhaps, for many companies, could be probably the best month in history. So I think from that perspective, what you're seeing is a huge amount of a spike that's happened. I think it's been borne out that the recovery has been V-shaped in some ways. The reasonings have been well given, and it's across sectors now. You know, if you'd spoken to us, I think a month ago, when we were on your channel, I think there was doubts as to how commercial vehicle segment or construction equipment segment would play out. Fortunately, all of them have started to not just show green shoots, but have started a good growth in terms of from where they were. And I'm pretty confident at this point of time that those look to be going back to previous year levels, and more importantly, maybe the year before that, which was probably the best year. Even the last year we saw the auto industry drop by about 14, 15, 16%, depending on what company you were talking to. But we are talking about going back to FY19, which perhaps was a very good year for the automotive industry.
Do you also feel that this will sustain post-festive cheer? ICRA also saying that component sector accruals should improve significantly in FY22, and given current projections, do you feel that that's likely?
Well, I do believe that, there has been introspection by the industry, and in fact, the margins have improved across the industry. And of course, because we've had losses in the first quarter, which kind of even moved into the second one, it will take some time for those losses to be wiped out. So not as an year, but next financial year, for example, if the habit of better margins has stepped into the industry, and if the market sustains and grows as we anticipate it should, I think then in the long run, one would be able to say that the COVID year was perhaps just an exemplary stop in the mud or a speed breaker. And the auto industry is back in full flow, working on 6 cylinders if you go to FY22. That's what we are hoping. However, there is a lot of conjecture. We can't take away the fear of COVID-2 waves and COVID-3 waves. Well, none of us can say anything. I think you'll have to bring in astrologers to say anything on that perspective. But to our understanding, at this point of time, things look very good.
I'm not sure even astrologers really know at this point, Jayant.
There you go.
But let me bring Mr. Bohra in as well. And Sunil, I want to get your outlook as well, in addition to what we've just heard from Jayant. But I'm also hearing that, while you're saying the demand is picking up, looking better, indicators are better, that on the kind of cash flow side, on really getting things moving again, there is still a crunch. Is that so? Because again, it just comes back to, how far you really see this brief uptick lasting if things aren't also opening up, overall.
No, definitely. I'll maybe answer this question in 2 parts. First is how do we see cash flow across industry and what is our perception and belief, and maybe later part I would try and answer from the Minda Industries perspective. So first of all, definitely I think the good part of the Indian automotive industry is that the industry definitely is sort of, I would say, a cash stable industry, and most of the major players are cash rich. So that definitely helps in terms of planning your cash, your entire cycle from OEM to tier 1 to 2 and 3. So definitely this entire sort of supply chain, as of now, we don't believe that there are any sort of cash pressures. Wherever there were, we have tried to help, we have tried to hold hands of our suppliers, and same way the OEMs have been doing. So from that perspective, as of now, I don't believe that cash is going to be a spoil sport for the growth which currently we are seeing. In terms of our company specifically, we all know that we have always been conservative and cautiously optimistic. We have always planned for the worst, and for that we have also had some small right issue which we have recently concluded, and our debt equity is very, very comfortable at 0.3 to 0.4. And the way we are seeing sort of business currently ongoing, I think we are in a very, very comfortable position. And I believe and I would like to believe that that's the case with most of the auto component players in the country.
Right. Jayant also wanted to bring in the Aatmanirbhar angle here, and I'm just wondering if indeed the government becomes a little stringent on the imports from China, or for that matter other countries. How equipped are you to replace that?
So definitely, I think we have. Sorry, go ahead, Mr. Davar.
Go ahead, Sunil.
So I think we all know that the Indian automotive industry has consistently been working towards localization, irrespective of what happens around the globe. And if you see the journey in past 3 decades or so, since sort of Maruti started, consistently year after year, we have seen focus on localization. And I would take our own example that the way we have grown, the large aspect of that growth is primarily localization. The lot of products which you have added are localization, and currently we are spending a lot of money, to more than maybe 500 crores. Both the products which currently we are spending are localization, and that has nothing to do with China or something else. So this journey is a continuous journey. Yes, you are right. Because of the recent rising tensions, it has sort of accentuated the demand or the pressure towards localization. And most of the players, including us, we have been trying to see how we can have alternate sourcing strategies for past few months. And in case something happens, I'm sure the industry is trying to sort of prepare itself for the worst. And there are pockets where we are also dependent maybe on China, and we are currently in the strategy of having our alternate geographies. And to large extent, I think we are done with that. And it is now more towards getting those supply chains started. So I think that's what I would say from the Minda perspective. And I believe that this has been the push from most of the OEMs in terms of localization and sort of de-risking the supply chain if in case they believe that there is some such potential which may come in future.
Jayant, you want to come in on this point?
Well, honestly, I think it is a huge trigger, huge trigger for our industry. Sunil is right that we've been taking the localization part as an industry, as a sector for a very long time. However, I think what has happened is this is the first time that the OEMs, the suppliers, the government, and even R&D centers and academia have gotten together to say that this is the route forward and we need to do it extremely quickly. Now, why we needed all these stakeholders to come together was the fact that because we have a limitation in economies of scale, when we build anything new, the entire substitution of these imports from China would require the OEMs or the system to pay more than what is prevalent with the economies of scale that are in China. But I think everybody has moved forward with the intent, with the agreement of sorts to say, yes, we are prepared to take this step in India. And as we speak, very aggressive moves are happening to get into localization of all those things which were probably otherwise seemingly 5 to 10 years away. So I think this trigger is going to be extremely useful for the entire, not just the auto industry. I understand it's across sectors. The OEMs come together and say, well, if you're importing any subpart from China, it has to stop. So you need to give us a strategy as to when you're going to do it, how you're going to do it, and what it's going to cost, so that we can work on the costs initially to subsidize it to a certain extent, and then post that to make sure that India builds the volumes that can bring cost to an effective level, which is probably the same or even lower than that of China.
Sure. Sunil, Jayant, both of you, thank you so much for taking the time out and helping us understand the dynamics of the industry and where it's headed in future. Good to have you both on the show with us.
Thank you.